Well, the Bitcoin weekly close left a lot to be desired with another rejection at the 200-week simple moving average. In today's video, I'm going to talk with you a bit about that, as well as some of the big factors that are weighing very heavily on the minds of market participants and why we are seeing this kind of fear come into the markets at the start of the week this week. My name is Lark. I make videos talking about investing. If you do like that topic, make sure to subscribe to the channel and just take a quick moment to tap on the thumbs up button if you do enjoy this kind of content, that is. Now let's go ahead and get into it. And the first thing I want to talk about is the macro stuff that's actually spooking the market, just before we get into the charts. So we have major market moving events this week for Bitcoin, for crypto, for the stock markets, and obviously what happens in the stock markets directly affects what happens in the crypto markets because we're all just moving as one in this big macro environment right now. So we have corporate earnings reports that are starting to come through. So that's a major event. Everybody's very worried about that, or it's going to be much worse than expected. Is this beginning of the end? A lot of negativity has been surrounding the release of these corporate earnings reports. We have the Fed meeting on the 27th coming up, and of course, the interest rate raise potential for that meeting. We have the US GDP Q2 data release on the 28th, and the White House already getting out in front of that, saying, well, you know, we just have to change the definition of what a recession means. You know, some people disagree on how exactly you would quantify that, meaning that the data must not be super awesome because that means we're likely heading into a recession for the US markets. Interesting, though, as Jurian Timmer points out here, after all the hand-wringing about the next shoe to drop, a boring earnings season would actually be a relief. Q2 so far appears to be just that, with 72% of companies beating estimates by an average of 4.3%. That's pretty crazy. And look, only 104 companies reported so far, and some of the big tech boys, when they come out, could spook the markets with their earning reports if they're much worse than expected. But we actually have companies kind of, you know, beating those estimates and potentially could be in for a bit of a boring earnings season. If that's the case, then the corporate earnings narrative kind of falls on its face. So that's a good thing to keep an eye on. And also, interestingly, everybody's been talking about the Fed. Are they going to raise by 1%? And look, after the inflation numbers came in last week, the Fed fund, people betting on that were saying, well, it's definitely going to be 1% now. There's no chance it's not going to be 1%. But actually, the numbers have swung back, and actually is most likely is around an 80% chance we're going to see a 0.75% increase in the rates. Although there is still about a 20% chance we could see a 1% raise. A 1% raise would probably freak markets out a little bit. I think we do have, to an extent, that possibility priced in, but a 0.75% interest rate hike probably wouldn't spook the market too much because people are kind of expecting that. And even to the extent that they might go, well, it's only 0.75, they didn't do 1%. Maybe it's better, maybe we should be bullish because of that. But all of this uncertainty from these three big events are weighing very heavily on the mind of investors this week, which has resulted in this. Let's talk about the charts real quick. This is the weekly close here for Bitcoin. I mean, just look at this. Look at this candle. Come on, Bitcoin. We rallied all the way up to $24,300 during the week. And over the weekend, we just got hammered back down under the 200-week simple freaking moving average, which is this right here. Gosh darn, man. Gosh darn, that is another weekly candle close under the freaking 200-week simple moving average. It's wild stuff here for the markets right now, with so much pessimism remaining in the markets and just what has really been a historical run here for these weekly closes under the 200-week moving average. And look, I know I'm a broken record when I say this, but I have to say it. Historically, buying at or under the 200-week moving average has been a good move. I have been buying here. I'm not telling you what to do. I'm just saying what I've been doing. I have been buying Bitcoin right throughout this mega market dump that we are currently in. You know, we're massively down for Bitcoin. All the altcoins are absolutely savage, but I've been buying Bitcoin right throughout this period. I'm not afraid to stack sats aggressively throughout this period. Obviously, not spending all my cash at once, right? But averaging in nice little weekly doses of Bitcoin here. And as you can see, our new weekly candle starting off pretty grim as well. We've had a Nice little correction already moving into the new week here. We do see this key area of price support here right around $21,000, which we did wick down to today. And whether or not we see that, maybe that was the bounce point, people got freaked out, but as the market, if the news is not as bad as expected, we could see a bit of reversal going on throughout the week. What I'd like to see this week would be an opposite of this candle. So you see how this candle has this giant wick on it here showing that, yeah, the buyers lost momentum, the sellers took over and pushed everything back down. If we had an opposite of this week, I'm just talking fantasy charting here at the moment, but if we had an opposite of this week where we actually had this big wick here and a nice little green candle body close here, well, that would be fantastic. Of course, it all depends on what is going to happen with this macro news right now. We do still have a bit of hopium, though, that we could see if the rate hike is 0.75, probably market not going to freak out too much. If the earnings reports are halfway decent, and if, of course, the recession is avoided or the recession is like just barely technically in, well, people may not actually get that too concerned. We are still looking at the situation, for example, on the MACD for the weekly charts here for Bitcoin, where we are approaching a potential bullish crossover. Has not confirmed. Could take a couple weeks still to confirm, assuming we don't just go down to Goblin Town and get a whole bunch of negative price action. But we could see this confirming, and if that does, we have had situations in the past where that has represented a serious reversal, especially at these kind of levels. We see the stochastic RSI as well starting to trend upwards a bit on the weekly. Obviously, that can change very quickly, but usually these kind of trend reversals do indicate significant enough price movements for Bitcoin as a potential setup. So definitely just keeping an eye on these movements right here. But this, it just remains the line to beat, doesn't it? The 200-week moving average, man. It's what it is all about right now. This is the line of control for the bulls and the bears. We've now seen a failed test here back in the start of July where we had that wick right up to touch it and then blammo, right back down. We had so much hope last week. Remember, we were talking about that last week. It's a relief rally. Be careful. Don't get too excited. Well, here we go. They pushed it back down on us again, pushing it back under the 200-week. And now, of course, starting off for a pretty rough week in markets because all that fear and all that uncertainty that we currently see dominating the news cycle for crypto and for stocks. Anyway, before we finish up, if you are a cryptocurrency trader, you need to get yourself an account over on Bybit. You can long and short on their wildly popular futures markets, Bitcoin, Ethereum, all the top coins. You can also trade their spot market. They are the 7th biggest spot trading market in the world. Huge range of altcoins to trade with. They got NFTs and all that fun kind of stuff. Use the link down below in the description. You will get 30% off of your fees and up to $4,100 in deposit bonuses. So, guys, what do you think? What is going to happen with all this macro stuff this week? Is it going to be as bad as some people expect it's going to be? The rate hike's going to be bigger. The corporate earnings reports are going to be terrible. A massive recession is here. Or is it actually going to be really not that bad and provide a window of recovery for markets moving forward? Very curious to hear your thoughts on that. Let me know down below in the comment section. Thanks so much for watching today's video, and peace out till next time.